Good morning, everybody. It's Christian from Serene Education with your 4 majors notice update for the 20th of June 2012. Hi, guys. Hope you had a fantastic day yesterday. We saw a lot of movement in the markets and a lot of it positive after news coming through from the G20 summit meeting. A lot of money coming from countries around the world, part of the G20, to shore up the crisis war chest, the Euro war chest, and also talk making its rounds that they are putting together, the EU leaders are putting together a bailout kitty of around 750 billion euros for Spain and Italy. So a lot of positive news that people are taking on board, and we saw this upside candle yesterday after a very indecisive one the day before, and taking us above this 38.2% retracement area from the high that we saw here just before this sell-off in early May down to the early part of June. So as long as we maintain above the 38.2 now, there happen to be price support and resistance here at the 1267 mark, then ultimately we should be looking at our longer term target for the remainder of the week here at the 50% line at the 1280. Get above that, looking at 61.8, which will take us back just below or short of the all-time price support and resistance level, quite a major one at the 1300 level. So that'll be our long-term target for the foreseeable future. As long as this momentum remains to the upside, you can swing high yet again. And we have two parts of our strategy. However, if you're trading intraday, you can just make a note of this 1267 here as your support. As long as price remains above this area now, you can quite clearly see a nice support before and a resistance level on 3 consecutive days before we had the breakout. We should be looking now potentially at the upside favorite at 12800. Okay, first target, second target 61.8, and the 78.6 would take us back to the 1300 here as our next targets to the upside. Next up, sterling. Okay, upside favoritism. Yesterday we saw more momentum after this pullback on the market. 15,300 we know is a major support and resistance level for this pair going back a number of months. So 15,300, make sure you got these lines in, guys. Very, very important. Always got to know where price is likely to travel to, and the highs excuse me, highest high up here at 16,300. Massive sell-off like it did on the euro pair. So we take the high to the low retracement figure or tool. You can see the 23.6 here. A lot of hesitation at this area on this bounce, the psychological bounce here, because of this major support in the past. Targeted the first area, had 23.6, then found support and moved towards 38.2. Breaking through that and hesitating under the above the 38.2, but just below the institution moving average. Finding support now, and on the Asian session this morning, slowly moving higher. Not a hell of a lot of trading range. Very, very indecisive. And we need to see price trading above it as well as the 50. Get above these two over here, above 15,800, and then we're looking pretty for the foreseeable future long term. It's imperative that we get above this because it's going to be a major hurdle between the institution and this 15,800 here. So get above all this, and we're looking happy for long-term sentiment to the upside. So all we need now is a nice break and close above 50% or the 15,800, and then we're looking pretty for the remainder of the failure to see that, and failure to see a break above 15,800 and the institution. Could see price consolidating furthermore with an outlook for further sentiment to the downside towards the 38.2 as our first target. Been there before, there's no reason why we don't have to go there again. So very, very important to see further upside. We do need to see this area here of resistance being broken and price trading well above it with a nice bullish engulfing. That would definitely confirm we should be looking further upside moving for the foreseeable future. US dollar Swiss franc, this pair, a lot of negativity yesterday after this upside candle Friday. So we take the lows over here in May to the highs in early June. You can see that prices pulled back to 23.6, the 38. Not a hesitation in this area because you'll notice it'll be a nice support and resistance level at this area. And yesterday's candle engulfing this upside movement. However, we wanted to see price now finding support above or remaining above the 38.2 to see any further extensions to the upside in order to first target 23.6 and second target back up here towards the 97500. That failed to materialize as price now traded into the intermediate downside trend and resistance was felt. and we had this bearish engulfing here, which took us back below the 950. So as it stands now, intraday, if price fails, materialize, and trade above 950 before the US session, look to see price reverting to the downside with our first target here at the 50% line at the 940. Second target 61.8. There are the interest rates news for the US market is the news is coming out at 5:30 p.m. GMT this evening. So you see what happens with interest rates. Will they change? Will they won't change? They are currently at 0.25%. The forecast is for no change at 0.025%. So if we see price failing to get above 950 going into the US session, there's more likelihood for price to head off down to the downside towards the 50% line. CTC on this time frame is still very much indecisive. We only have 2 parts of our 4-part strategy template. However, that sentiment is trading below a major support and resistance level, and we should be looking for target the next level down, which is here just at the 940 mark. Last pair of the day is US dollar Japanese yen. Let's have a look. Yesterday, very indecisive trading range, not really breaking higher, not really bouncing off that institution moving average. Not a very decisive positive candle, that, to be honest with you. Since that move that we've seen through February right up to mid-March, up there towards the 8400 mark, we've seen price reverting to the downside. All these areas here at 80 in particular is a major support and resistance level. You've got to put a nice big strong horizontal line on that. And there's another one down here at 78, if I'm not mistaken. Yep, there we go. Price bouncing here at the 78.6% fib retracement mark from these highs down to here. I could just put that down. I don't know if you'll be able to see it if I put that line in, but let's put it on anyway. It's important that you guys see these lines. Yeah, 78.6 there. Okay, so very, very important. As long as it maintains above the institution moving average, then positive. However, the intermediate downside trend is very much in play. You can see the swing lows dictating price action and trading below a major support and resistance level here at the 80. As long as price remains below this, then we're looking at resistance above us. And you can see this past week, not really decisive in doing so. Excuse me. In doing so, forming a new swing low at the underside of the 80 mark, which happens to be a prior resistance and support. And most importantly, our CTC is very much in our favor. The only thing in the way is the institution moving average here at 78.50. Get below that. As long as it remains below the 61.8, we should be targeting the 78.6, which is down here at 77.70. So get below this, nice close below the 78.50 here would definitely tell us that we should be looking for further sentiment to the downside, with our first target being 78.6%. Okay, guys. Hope you have a fantastic trading day. Please make sure that you are aware of the news announcements out there today. There are some news announcements, including the interest rates announcements. We have this morning at 9:30 a.m. GMT, Sterling's Clement count change, the MPC meetings minutes. We have unemployment rates for the UK market. And then going into, we also have German PPI month-on-month figures, which came out just right now as negative. So Euro not really doing well at the moment now. The forecasting of a negative 0.1, it came out a negative 0.3. So not very good over there. But going to the US session this afternoon, we have crude oil inventories, the FOMC statement, very, very important. Be aware of that. And we have the federal fund rate, the interest rates announcement for the Fed. That's going to be one to watch as well. So just keep an eye on these things, guys. Very, very important. Okay. Other than that, have a fantastic trading day. Please make sure you follow the rules of the CTC if you are using it, and back it up with sound money management. Okay. Be patient, guys. It's very, very important. Be patient as a trader. Look for those confirmation candles. Look for those confirmation moves, and then we'll trade them. Okay. I'll see you first thing tomorrow morning. Until then, trade serenely.